Hi everyone. Let's take a look at problem 8-1a, which asks us to analyze internal controls. We have 5 separate cases that appear on the screen. We need to identify the principles of internal controls that are violated. And then we need to recommend what the business should do to ensure adherence to principles of internal control. Okay, let's concentrate on number 1, which appears to the left of my mouse. Chi Han records all incoming customer cash receipts for his employer and posts the customer payments to their respective accounts. Okay, now, hopefully you see the weakness in internal controls here. And let me move this down so we can take a look at this one. Alright, this one violates a separation of duties. The way around that would be if the company implements a policy so that the person recording incoming cash receipts is not responsible for posting the payments to the customer accounts. The way it's set up now, Chi Han could essentially invoke a accounts receivable kiting scheme where he or she could be siphoning off the money off of the top and posting it late, in the meantime putting some funds in his pocket. So there's a violation of the separation of duties on number 1. Okay, how about number 2, to the left of my mouse? At Tyco Company, Julia and Justin alternate lunch hours. Julia is the petty cash custodian, but if someone needs petty cash when she's at lunch, Justin fills in. Okay, let's see what the weakness is here. Okay, and this one is a violation of the principle of established responsibility. Only Julia should have access to the petty cash fund since she's the custodian. Now, the company would need to implement a policy of not allowing petty cash transactions during the lunch hour. Alternatively, Justin can serve as a petty cash custodian with his own petty cash fund, but you wouldn't want them combined. Okay, number 3, to the left of my mouse. Nori Nizumi posts all patient charges and payments at the Hopeville Medical Clinic. Each night, Nori backs up the computerized accounting system to a tape and stores the tape in a locked file at her desk. Okay, I'll slide up a little bit so we can move this down. And here, our textbook points out that the violation is one of proper application of technological controls. Daily backup itself is a good internal control, but the tape should be taken off the premises every night. If the building and computer are destroyed, the data can then be restored from the tape since it's safely kept off the premises. The company should implement a policy of storing tapes off the premises nightly. I'll also offer the idea that there is also now backup over the internet, which is not as quick as storing it on tape. However, it does make it very easy to do remote backups and done in the evening hours, and then the backup is stored on a server which could be across town or across the country or even across the globe. So more and more we're seeing that kind of solution being put in place. Alright, let's slide up and tackle number 4. Benedict Shales prides himself on hiring quality workers who require little supervision. As office manager, Benedict gives his employees full discretion over their tasks and for years has seen no reason to perform independent reviews of their work. Okay, so if we slide this down, what we uncover is that this violates the principle of having regular and independent reviews. Benedict Shales needs to implement a way to regularly and independently review his employees. Hiring of internal auditors or an outside consultant to objectively review the internal controls and the employee's work needs to be implemented. Okay, let's take a look at number 5. To the left of my mouse, Kayla Farah's manager has told her to reduce costs. She decides to raise the deductible on the plant's property insurance from $5,000 to $10,000. This does cut the property insurance premium, cuts it in half. In a related move, she also decides that bonding the plant's employees is a waste of money since the company has not experienced any losses to employee theft. Kayla saves the entire amount of the bonding insurance premium by essentially killing the policy. Okay, now hopefully that raises an eyebrow. Okay, so what does our text say about that? It says it violates the principle of insuring of assets and the bonding of key employees. Now, we don't have enough information to know if the company can afford the move to the higher deductible, but we can say that dropping the insurance for the bonding the employees certainly weakens internal control. If the company does need to engage in cost controls, they should do it without compromising internal controls, if possible. The insurance for the bonding of the employees, or at least key employees and those in sensitive positions, should probably be reinstated. Okay, and those are 5 different areas, and we've taken a look at some principles of internal controls and analyzing some situations. Thanks, everyone.